Welcome to Magpie YouTube channel. I'm Anthony, Magpie Invest Strategist. In today's video, I'm going to talk about a very important risk management concept, maximum drawdown. After a graphical illustration, I'll show you a few Chinese equity funds that demonstrated impressive returns over maximum drawdown during the market decline in recent years. No matter how safe an asset or portfolio is, there's always a risk of losing money. To tell whether a fund is doing well, investors should not just look at the return. They should also look at the risk involved. This is because there's a lot of uncertainty in the market, and uncertainty always leads to risks. Therefore, when we choose a fund manager, understanding risk indicators is of the utmost importance. Among the many risk indicators, the most direct and intuitive one is the maximum drawdown. The maximum drawdown is the maximum observed loss of an investment portfolio from a peak to a trough before a new peak is reached. Let's start with a graphical illustration with the portfolio of $1 million. As we can see in the chart, the fund's net asset value or NAV increased to $1.5 million in 2020 and then retreated to $1.2 million. The magnitude of the decline would then be $300,000 or 20%. The decline in NAV is called a drawdown. Later in 2021, the fund recovered and rebounded to another high at $2 million, but later declined to $1.7 million. Even though the decline amount is also $300,000, the drawdown percentage would only be 15% this time, as the portfolio was down from a high level of $2 million. Later in 2022, the fund's net asset value increased further to $2.5 million and then fell to $2.1 million. The drawdown for the specific period would then be $400,000 or 16%. Looking at the overall period from 2020 to 2022, the maximum drawdown in terms of the amount was $400,000 in 2022. In terms of percentage, however, the maximum drawdown would be 20% in 2020. Therefore, every period would have its own drawdown. The biggest drawdown in an aggregate period will be the maximum drawdown. For whatever asset or funds, investors should always look at the percentage of the maximum drawdown to learn about the risk level of their investment. In a nutshell, the larger the maximum drawdown percentage, the larger the downside risk of a fund, as it usually takes longer for a fund manager to recoup the loss and return to profitability. In contrast, the lower the maximum drawdown percentage, the more resilient the fund against market downfall. This is because, given equal returns, a smaller maximum drawdown percentage suggests that a fund manager can start compounding at a higher level. The best way to smooth drawdowns is by diversifying into different asset classes, time frames, and strategies. As long as the trading strategies of these funds are based on a totally different logic, then their maximum drawdowns should be less likely to overlap. For investors who are keen on investing in China equities, for example, it makes good sense for them to look not only at the returns but also the maximum drawdown. The Chinese equities markets have been lackluster in 2021 and 2022. As seen in the MSCI index, the Chinese equity market suffered an annualized loss of 8.2% in the past 3 years. During that period, the maximum drawdown that the MSCI China suffered was a daunting 59%. With the MSCI China as a reference, investors should go for Chinese equity funds with lower maximum drawdowns and higher returns. In terms of risk-adjusted returns, E-Fund HK China Equity Dividend, JP Morgan China Pioneer A-Shares, and Value Partners China A-Shares are amongst the top 3 performing funds. These 3 fund managers not only generated positive returns in the past 3 years, but also managed their maximum drawdowns, which are smaller than that of the MSCI China index. Their higher karma ratios are indeed a testament to the fund manager's prowess in diversifying risks to overcome behavioral mistakes. After all, risk management is always key to successful investing. Investors should always stay alert to any market changes. Thank you for watching. I hope you enjoyed the video. Please like and subscribe to the channel to stay tuned. See you next time.